In the very dynamic world of real estate investing, mastery of the basic strategies will make things work better for you regardless of how the market goes. One of the most useful, but not necessarily simple, basic strategies for real estate investing is a lease option, also known as lease purchase and rent to own. That is what we are going to discuss. A lease option happens when you decide to sell a home you own but market conditions just are not ripe for selling it today. You then decide to rent it to a suitable tenant who can rent it today but seriously wants to buy it tomorrow. A lease option puts you in position to collect rent today and sell the home tomorrow. This means it has two elements, the renting and the selling of the home. Renting the home is the lease part of the deal. Selling it is the option part. What are the benefits of lease options? First, the buying pool of potential home buyers expands considerably. Of 10 people who visit a home, only one will qualify/wish to buy it. Of the 9 who don't qualify, about 3-4 could qualify/wish to purchase within a year. These people are the perfect market for a lease option. From only one potential buyer, you add 3-4 more. Second, you make money today and tomorrow. By renting the home, you receive monthly cash flow. By securing the option agreement, you get a lump sum up front. By closing the sale, you get a large payment at the end. How exactly can lease options help me in my business? Lease options allow you to deal with more homes. Be clear about one thing, you'll want to buy homes you can transform into good candidates for lease options. What are some of the aspects I need to evaluate? Type of house. This is crucial. It's the family that buys the home, so make sure to select family-friendly home. This means the home should have a minimum of 3 bedrooms and 2 bathrooms. Also check out the neighborhood, it should be pleasant for the family. Cost. The price of the home you buy should be low enough to provide monthly cash flow when you rent it. Its cash flow should be at least the same as your other rental properties. Comparative price. The range of prices prevailing in the neighborhood influences the future selling price of the house. When buying homes you plan to eventually sell, avoid those at the lower end of the scale. Lower-end homes are likely to remain as rental homes. Look at the median price in the range and do lease options only on homes that sell at the median price or higher. Anything below that will attract permanent renters, not potential home buyers. Rent rate. Setting the rent is the tricky part. In relation to the rental prices in the area, the lease option home should attract rent rates high enough to give positive cash flow after mortgage payments. In setting the rental amount, it is important to remember that the tenant is supposed to be the future buyer. If the rent is lower than their future mortgage payment, there is no incentive to buy the home. It makes no sense to go through the paperwork if the result is to increase one's cash out. So the total rental and option should be at least the same, or slightly higher, than the comparable mortgage amount. Repairs. Look at the house critically and see what sort of repairs need to be done. Structural issues could cost a lot of money or may not be fixed. Note that deficiencies can be acceptable to renters, for example, slanting but stable floors, but are absolutely unacceptable to prospective homeowners. Remember, too, that the biggest bang for your repair buck comes from improvements on the kitchen and baths. Thank you. Let's meet again tomorrow to discuss about rent.